Good morning and welcome to our Appraisal Rules Have Changed, the 7 most important things you should know to close more loans webinar. Please let me introduce to you the president of CAMP, Ms. Audrey Boissonneau. Audrey?
Thank you so much, Megan. Thank you to everyone who's on the call, and thank you so much to our panelists. We are here today to discuss appraisals and what's going on in the industry, and it's constantly changing, as you'll see in the discussion. A few housekeeping things to start with. First of all, next Tuesday we will have at 11 p.m. maybe at 11 a.m. we will have Dave Luna and Rob Chrisman. They will be doing another market update. We're going to have market updates every Tuesday as this continues, not forever, but just while it's necessary to have market updates. So 11 a.m., the information about that will be going out as soon as this webinar is over today. And it is membership renewal time for CAMP. So if you are not on auto renew and have not yet renewed your membership, please check in and make sure you're up to date on that. If you have any questions, you can direct them to either Megan or myself, and we're happy to answer them. We also have Kevin Casey on the call. He is CAMP's president-elect, so we will be taking it from there. So let's get going. I'd like to introduce Mike Simmons, Dean Hune, and Nick Robertson. They have so graciously agreed to join us today to help us navigate the new appraisal rules as they stand at the moment. So gentlemen, welcome.
Good morning, everybody.
Good morning.
Morning.
So you've all read their bios. I'm not going to go into all of that, but we know that Mike is with Axis Appraisal. He's not just with, he is the head of Axis Appraisal. Dean is the president of Property Sciences, and Nick is a VP for Act Appraisal. So let's just get right to it, guys. Let's start with Dean, and why don't you tell us a little bit about the temporary guidelines that are in place?
Sure, thanks, Audrey. You know, the temporary guidelines, so, you know, I've been talking about things in sort of phases, and, you know, the guidelines have come out for GSE and for HUD kind of in varying phases. And so HUD came out early last week. GSE came out early last week. The HUD guidelines came out early this week, and they're both fairly similar. There's a little bit of nuance that's different, but overall, the directive is, you know, if it's a purchase loan within certain parameters, it can qualify to go one of these alternative appraisal routes, a desktop appraisal or an exterior drive-by, if the area is affected by COVID-19. And then on the refis, it is a little bit stricter. So if it's a loan that is a Fannie loan that's going back to Fannie, or a Freddie loan that's going back to Freddie, then and it's rate term refi or some low cash out, it can go the route of an exterior drive-by. So it's really that simple. Now, you know, I mentioned the word phases, so I think about it in terms of 3 phases. Phase 1 was everybody was waiting for the GSE and the HUD guidelines to come out, and now that they're out, it's the second phase. And the second phase is everybody figuring out how they want to proceed. You know, how are lenders going to consume that information? How are AMCs going to consume that information? What's their plan? And that's sort of what this week has been. And everybody's moving at different paces, right? It depends on a lender's lending footprint and their size. And once they figure all that out, it goes to the third phase, which is implementation, which includes workflow changes, IT changes, you know, loan level changes, dispersing information out to loan officers and mortgage brokers and borrowers. So that's sort of a coordinated effort. And that's kind of the phase that a lot of lenders are in right now, is implementing things. Some of the smaller lenders are doing it a lot quicker because they're simply moving to a cascade model. And when I say cascade model, I mean, you know, they start off with a 1004, typical traditional appraisal with an interior inspection. And for whatever reason, if that can't be met, a borrower has declined someone coming into their home, appraisers in that market are not comfortable going out, then you can go back to the lender and they could potentially cascade it down to one of the other flexible products. Now, as we go through the process, each lender is going to have to take a closer look at each loan. Now, as a secondary option to the cascade model, some lenders are looking at, I hear echo, by the way. I'm not sure who that is. That might be me, but if the panelists can mute their line, I think that's what we said we would do. Aside from the cascade model, some lenders the larger lenders are looking at things more globally. They're looking at setting guidelines so that if they get a loan into their pipeline, right off the bat, they may order an exterior drive-by or a 1004 desktop right away, rather than go through the back and forth of the cascade model. So that's what we're seeing out there from these GSE guidelines. And, the key date is May 17th. So for the GSEs, any loans with application dates prior to May 17th would qualify to go down this route. With HUD, it's based on inspection dates before May 17th. So those are sort of the main bullet points that I wanted to hit on to kind of summarize the guidelines.
I think it's interesting. I hadn't heard that method being referred to as the cascade method, but I am seeing it with lenders where you start off with, can we get an appraisal? Because if we can, we want one. And then you go from there. So, and I know that you deal with lenders that do jumbo financing too. So, and I know that that is an ever-changing situation right now, but are you seeing similar things happening with our jumbo lenders?
So, when you start talking about jumbos and you start talking about possible portfolio loans that really, some of these might not end up in the hands of Fannie or Freddie. And when it's not based on GSE guidance or HUD guidance, then it really is up to the lender on how they want to proceed. And that's based on how their collateral risk policy, their credit guys. And that's what, the second phase I was talking about was figuring out how they want to proceed, not just for GSE agency loans, but the portfolio loans as well. And right now, there is no standardization. We're literally having conversations, and I'm sure Mike and Nick are too, with every single one of our clients to see what they're doing. And, not everybody has it figured out. We're talking about a process that would normally take 6 to 12 months to implement, and everyone's hammering it out in 1 to 2 weeks. So with that, there's going to be a lot of chaos and, a lot of pain and stress, but I think we'll be able to all get through this.
I think that the message is that we all need to always, and this is something we all have to remember all the time on every subject, is check with our individual lenders for their specific guidelines, but this will give us a baseline for that. And I believe that we have the Fannie Freddie guides list posted on our camp website. And if they aren't, they will be as soon as this is over, but I think they are. Nick and Mike, do you have anything to add to Dean's comment?
I would say, this is Nick, I would say that is extremely consistent with what we're seeing as well. Most of the lenders are following that cascade that Dean referred to, where, each lender may have a little bit different process in how that cascade begins. Some of them require us to go back to them and, inform them first, and we wait for their response, and others have directed us just to proceed with it. So it's very lender specific, and it's important that if you have any questions on that as on the lending side, it's really important to reach out to your lender to find out what their specific guidelines are and what their process is.
And Nick, while you're at it, why don't you just go into what the COVID-19 guidelines are for entering a property, the most current things as we know it. I know that we just got new shelter-in-place guidelines recently, and things are shifting slightly, perhaps. But go ahead and share with us guidelines
We were talking about that right before we started this call. Dean and Mike actually brought it up that there's been some new, new guidelines that have been put out there regarding the restrictions and things like that. And there's some different interpretations of the restrictions in most of the area of the country. From an AMC perspective, we're proceeding business as usual, meaning that we're still making an attempt to engage the appraiser. There is a state, I think Vermont, that's no go. You can't do it. They're not allowing it. But as far as the rest of the country goes, the guidelines are a little bit different everywhere. This is an essential industry, as we all know. It's been established, and we're part of that essential part of the process. Mike actually had a great column that he wrote in our little write-up he had in Rob Crispin's blog, and yes, I read it, Michael. And it really laid out some of the precautions that the appraisers should be taking, things like that, as far as, one, having a conversation with the homeowner or the borrower up front, whoever's allowing them into the property, to make sure no one in the house has been ill or shown any signs of being sick, etc. I've seen some things where appraisers and the borrowers have reached an agreement where the borrowers will come outside the house while the appraiser goes in, does the inspection. Obviously, they should be taking full precautions as far as, face mask, gloves, touching as few things as possible, being in the house as with as little time as possible. So making sure they're getting information from the borrowers up front as far as what things they've done to the house, what they, upgrades, things like that. It's important that they have all those things ahead of time so that they spend as very little time as possible inside the property, and while remaining, keeping that social distance that's required as well. And we just really want everybody to be safe. So we're leaving it up to appraisers and the borrower's communication as far as making sure that they all feel comfortable with that environment and that they're being safe, and not trying to pressure anyone in any situation. So it's really, just common sense stuff that's been on the news endlessly for the last 3 weeks, right? And we're even recommending that they wear the goggles or a face mask, to cover their eyes. I've even heard in the last night, I don't know if anybody was on the MBS highway last night, cocktail hour they had, but they had Dr. Rosen on there, and he was talking about how now they've determined that the COVID-19 can get in your hair and be carried around. So maybe hats are the next step, to wear a hat as well, especially with women that have longer hair. So it's just common sense protocols that we're taking, not forcing anybody. In the areas where they're strictly prohibiting it or it's more serious, some of the appraisers are carrying around certifications that say that, they describe the essential industry that they're in and what their purpose is in. Mike, you might want to chime in. I know you got a good handle on this too, or Dean.
Sure. Thanks, Nick. So I'd like to emphasize a couple of things that both Nick and Dean have talked about. First of all, we're in a fluid environment where daily we're seeing changes and modifications and amplifications to the rules and guidelines that we all have to function and operate under. And one of the things that's resulted is it's increased the level of fear in the marketplace. I think homeowners are becoming more fearful. 2 weeks ago, when we would send appraisers out to do inspections, it was almost unanimous that they were welcoming appraisers in, grateful for the chance to have somebody come in and inspect their house and prepare a report and give them a chance to refinance or purchase whatever it was that they were doing. And it was almost universal. And they were grateful for people who were taking what they deemed as some level of risk to come out and do that. Now I think the needle's moved on that. I think there are homeowners who are suspect of anybody that comes into their house. And I think it gets reflected in a lot of different ways. I think that appraisers who really were the people that were concerned about it were really a narrow strata of appraisers who were more senior or who had compromised conditions to begin with, not certainly carrying the virus that anyone was aware of, because that's just an automatic disqualification. But But the fact is now they've become more concerned, and they've been asking for opportunities to do desktops. Now, I think Dean went over the kind of cascade effect that has taken place, that Fannie and Freddie have outlined, FHA has outlined, the VA has outlined, and except for Fannie and Freddie, which are really on a parallel course, VA and FHA have a different set of rules. But one of the things that Fannie has done has made it crystal clear that in order to do a cash out refi, you absolutely have to have a traditional appraisal. And if you can't get either through shelter in place restrictions or through a lack of confidence or willingness on the borrower's case to have somebody come in the house, or any appraisers that are willing to go in and do an inspection, then you just have to wait. There is no alternative. There just is no alternative. And I think that's been a hard pill to swallow for a lot of people. They think a desktop ought to be a valid substitute. Well,
And we've been seeing an issue with the tenant occupied properties more so than even the borrowers, and appraisers seem to be able to work things out. But frequently when they're tenant occupied properties, non-owner, the tenant's in there, the tenant is less likely to allow a stranger in the house to benefit someone else.
Well,
So,
and you're right, Nick, and that's true. But then actually, that's always been true since
that's always been a little bit true, right?
But the fact is that this stuff is changing so quickly. I mean, yesterday we got from the 6 Bay Area counties a new codicil to the banks and related financial institutions, where service providers would appear to be restricted from going into any house to do an inspection, absent the fact that the occupant is not still residing in the residence. Now, that may be interpreted a couple of different ways, but unless you've got an attorney that wants to interpret it a certain way, and a lender that's willing to do that, and borrowers that are willing to do that, everybody's kind of frozen, and you can't do cash out refis. I mean, I've suggested to some lenders that to remember that this is temporary. When Fannie and Freddie first promoted this change, their arc was 8 weeks. That was the time frame that they figured that these temporary instructions would take hold in the industry. 8 weeks. Now, I don't think anybody believes that 8 weeks is going to be the end game here. I think it's going to be longer than that. But I think as originators, one of the things you can do is you can perhaps look to some people who are desperate enough to get refinancing or anxious enough about it. Desperate may be the wrong word, but anxious may be another. Maybe you can put them in a HELOC as a bridge for this period of time. And we suggested that some lenders explore this, and that way you can at least keep in contact with your borrower, give them some immediate kind of help, or run the risk of alienating whatever healthcare orders are out in the ethos. So it's a challenging time. It's just a challenging time right now.
Yes, that would be the massive understatement of the day. Challenging time. With that being said, I just had a borrower who has an investment triplex, and 2 out of the 3 tenants said yes to the appraiser. The third one said no. So we're on hold because it's a cash out refinance. So it is, we just hold for a little bit. It's okay. No one's, in this particular instance anyway, it's not a matter of life and death. So I think, again, we just communicate with our borrowers from the LO perspective. We need to prep them for these, so they have the proper expectations. It sounds like as this new set of guidelines develops, that there are varying interpretations, as there always are. So, there will probably still be appraisers willing to go and do appraisals and able to do that, and some who won't, and just like it has been, right? So, Mike, will you do me a favor and talk about desktop appraisals and drive-bys, because I thought that you and I had a really interesting conversation the other day, and I absolutely didn't understand the difference. I had a wrong impression. So set the record straight on what an actual desktop appraisal is, what a drive-by looks like, what it entails, the cost, all that.
Sure.
Share.
So the first thing to remember is that a desktop under the New World Order is not your father's desktop, right? It's just not the same animal. An appraiser may be sitting at their desk and doing an analysis of the data, but the data is far different from what they would normally have to work with. And the rigor is far higher. The reason they substituted a desktop is because Fannie and Freddie said, look, we have a lot of data on a lot of houses. If it's a purchase, we've got MLS data that we can bounce off against what you're reporting, but we still need you as an appraiser to look at all the alternative sources of information, and that includes talking with the realtors, talking with the homeowners, getting interior photos if they don't have a complete set of interior photos in an MLS listing, and then making qualitative judgments as to what the condition of the property is. And the reason is they're not using a desktop form. They are using a standard 1004, which is your full appraisal form. And in order for that form to make it through UCDP and Fannie and Freddie to scrape all that information and be able to accurately assess what the risk is, they have to have all those fields completed. And what's more, the appraiser has to have sufficient information to be able to credibly and reliably rely on that in order to complete the appraisal. And if they don't have enough information, and in some states where it's a non-disclosure state, it makes it a little tougher to get all that stuff, then they can't complete the appraisal, and everybody just has to wait. So it's a far more complex process. It requires appraisers to do things that they don't normally do, and they still have to complete the same kind of form that they would on a full appraisal. So, number one, desktops aren't faster. They take the same amount of time. In fact, I think for a while, they'll probably take maybe even slightly longer. It's like learning dance steps, right? New dance steps. And their fee's not going to be any different from a standard appraisal. It's really just replacing the appraiser's feet on the ground inside the house to do the sketch and the measurements and the assessment in person with other alternative sources that give them that same information, so they have a high degree of being able to complete things. Now, having said that, Freddie Mac and Fannie Mae will not accept a desktop for a cash out refinance or even a rate and term refinance. At least so far they won't. I asked the chief appraiser for Freddie Mac yesterday on a conference call whether or not they're looking at modifying that rule, and they really weren't. He wasn't really at liberty to say, but he did say that they were talking about it. I know that Mark Calabria, who is the director of FHFA, who oversees Fannie and Freddie, has made it crystal clear that they're not about to add more risk to Fannie and Freddie's portfolio for a temporary reprieve in the markets. They're just not willing to do that. And what's telling is that Fannie and Freddie is just as it was back in 2008 for your conforming standards. They are about the only game in town. And unfortunately, most of your jumbo lenders are exiting the market too. There's private money that still will participate, but by and large, it's been very restrictive. Drive-bys are interesting. You can do a 2055, although depending on who you're doing it for, you have to do it on the 1004 form. not the old 2055 form. If you're doing it for Fannie and Freddie for a refi, and most lenders don't want to accept that because they won't rep and warrant it. Fannie and Freddie won't rep and warrant it. So it's not like you get a get out of jail card free by having it complete and answering all the questions. It just doesn't quite work. So
Right.
that's why
I thought that was so interesting that I always had this perception that those were easier, and now we're finding out they're not. So I thought that was the important takeaway here is don't expect it to be faster or cheaper or easier. So, right?
Yes, that's right.
We're getting some questions that are coming in. We'll take those at the end. Feel free to post them in the chat bar, and then we'll make sure that your questions get answered at the end of this. So Nick, why don't you talk about rushes right now? How's that going if you need a rush?
Well, and just to chime in on what Mike was saying there to finish that up too, is that you have to understand that with the desktop, any appraisal where the appraiser is not going inside the property has additional, from an appraiser's perspective, is additional risk on their part. Because could be things in the house that they can't see, that people didn't tell them about, that weren't, wasn't listed on MLS and things like that. So, appraisers are trying to protect themselves a great deal. There are appraisers that won't do desktop appraisals and such. So what we have now is we know that, we have an aging appraiser population that have been, and that's been going on for a while. There's some new blood coming in, which is good. But the problem is first of all, the market was oversaturated from the beginning, which is why we started seeing some rates taken up and things like that, because lenders had so much stuff in their pipeline. Everybody I've talked to, even with this going on, is telling me they're still having one of the best Aprils they've ever had. Those that are still in business, on the conventional side, et cetera. And what we had is appraisers that were swamped as well. And the other guys can attest to that. So my philosophy always is, if you don't ask, you don't get. You can always ask for a rush, and we can always do our best to try to get that. But considering the smaller pool of appraisers, the busy pipelines, the appraisers that are willing to do these desktops and drive-bys, et cetera, out there, we've had appraisers that just say, we're taking a month off, that kind of deal. I think that asking for a rush at this point is very wishful. I mean, it's like you can ask for it. I think it's highly unlikely that you're going to get it. As Mike already attested to, completing a desktop appraisal on the 1004 requires a lot of work. Yes, they're not driving the property or going into the property, but there's a great deal of research these appraisers are having to do to mitigate their risk. And part of that is interviewing, trying to catch realtors on the phone that don't always return their calls, and just making sure they have all the information they can. And they're putting additional limiting conditions into these reports too, to limit their exposure to risk as well. So I don't think that if you're expecting to get something in quickly, I think you need to be patient. You need to understand that I wouldn't say it's going to be stretched out too long, but like for instance, in San Francisco, where they've been shelter in place for some time, the appraisers that are there and the ones that are willing to still go out to do inspections, if they are going out, they're extremely busy. Their pipeline's 2-3 weeks built out in some of those cases. I just think that requesting a rush right now is unrealistic for most. If you don't ask, you don't get. We can always try, but that is my take on that, on the rush issue.
Dean, is it the same for your company?
Yeah, I echo, what Nick said, and there's actually one other issue that we're noticing is, keep in mind, Fannie, Freddie, HUD, all this guidance came out very recently, and the implementation of it is even more recent. Some lenders don't even have it fully in place yet. So there's a backlog of loans that are kind of on hold, awaiting a lot of these lenders to, get their processes in place. It's hard to turn a ship around in like 2 days, right? A large ship like that. So once they get those in place, even if they have the protocol where they say we can go with an exterior or we can go with a desktop, on day one, whenever they turn that light on, the green light on, the process is going to get flooded. There might be hundreds of loans that we're waiting for these processes to be put in place, and then all of a sudden you're trying to fill it in the same market, and that adds to the difficulty and the challenge of getting any type of rush. In general, over the next 30 days, I think with these new guidelines, it will increase the pool of appraisers available to do desktops and exteriors versus interior. But this initial release of this implementation, there's going to be a backlog of loans that really tie things up, and we are seeing the same things that Nick mentioned.
You would think that the appraisers I
was going to say, I will add that cascade that Dean talks about is very important because a lot of the lenders, some of them have turned it on auto drive where they're saying that if this, then that, right? So if you run into a problem getting the interior inspection, then move to this, switch to this channel and do this. You can do that automatically. Others require us to actually physically try 3 times to find an appraiser that'll do the inspection, or as soon as the borrower says no, they can't come in, or something to that effect, then we have to go back to them and wait for the reply. All those things take time because they're busy. So it's just the communication lag there of us sending a message, them coming back to us with new direction or approvals. Those take time. So that's, again, another caveat that we have to deal with right now.
So in a word, if we were going to quickly give us an estimate on what your average turn time is for just a regular old appraisal, forget about tenants, just owner occupied, somewhere where you just have to deal with an owner. What's the average turn time for an appraisal right now? Is it a week? Is it 10 days? Give us an idea.
This is Dean. I can give you what we're seeing. So I'll give it in terms of relatively speaking. So in markets where traditionally it's about a week, now it's dependent on kind of some of the shelter-in-place orders, right? In the Bay Area, it's a little bit more strict because I'm in the Bay Area, and they took kind of the initial stance, and because they treated it so seriously, everybody has that mentality. So instead of 1 week, we're looking at anywhere from 1.5 to 3 weeks, depending on the market. And some of the other areas may be less affected, and then we have markets that are outside of California, which don't really apply to the people who are on the audience here, but there's just no turn time at all because they shut it all down. So it really, really does vary. But I would say the rule of thumb is if it was a week, it could take 2 to 3 weeks now. And I'm talking about interior inspections, if that's even possible.
Right. And Nick and Mike, are you seeing about the same?
I would say that's consistent.
Yeah,
okay.
I would.
Mike?
And Audrey, I would agree with that as well.
Okay. Great. And all right, so let's talk about PIWs, Mike Simmons and ACE. So we know that those have been expanded. I know that a lot of appraisers are not big fans, but we are definitely seeing a lot more of it, and you definitely have the inside track with Fannie and Freddie. So why don't you get everyone up to speed on that?
So that's interesting. Some of the anecdotal information that I've come across within the last week is that it seems as if there are less PIWs that are being offered by the GSEs. And the only way I could account for that is that either the quality of the applications is declining right now, or the GSEs are tightening down their requirements and becoming more restrictive based on the fact that they want to reduce the risk, because these are really risk decisions. Property inspection waivers do not indicate that your property is necessarily worth X amount of dollars. What they do is they tell you that the borrower has good credit, they have employment, they have assets, and their automated value model or whatever series of tools they use to bracket what they think the value might be falls within a certain range that would allow that transaction to occur with a degree of safety that fits and risk that fits within their calculations. So maybe they figure they can accept up to, 7 or 8 or 9% risky transactions, and it won't disturb their overall risk profile and act to endanger their entire pool of loans. But that's what those things are. So they don't really tell you if you have a client that's buying a piece of property. One of the reasons clients reject those waivers is it doesn't tell them whether or not the investment they're making actually represents the value that they're paying. It just says, we agreed not to hold the lender responsible for any buybacks if anything occurs absent fraud, that they don't have to give us an appraisal. It's close enough. So from a personal standpoint and a professional standpoint, I don't like them. And they embed information into markets that tends to be distortive. It's a bigger, more complicated issue. I know that Paul Chandler at Property Sciences, who is the CEO of and Dean's boss, is on almost a jihad in terms of whether or not AVMs merit the kind of value that we place in them. And I would agree with Paul. I don't disagree about that at all. However, I recognize that they're a fact of life. I just think that they are, in some respects, they help sow the seeds of future fragility into the marketplace. But that's my personal opinion.
Paul and I have had a lot of conversations about PIWs and whether they are valuable or not. With that being said, they're definitely a fact of life right now. And I think it's interesting if you're seeing in the last week that they have dialed that back when we were told they were going to up the number of PIWs and et cetera. So, interesting. So Dean, Nick, do you have something to add to all of that?
No, I think that was about perfect.
Yeah, I don't have anything to add.
Okay. All righty then. So let's go to some questions. So I've got a question about if you have a purchase loan for multifamily, is a desktop appraisal allowed? And if tenants do not want to let the appraiser in, how do you deal with that? We sort of touched on the whole tenants not letting people in, but let's talk about the multifamily and whether desktops are acceptable or not. I would imagine we're going to talk about this from Fannie Freddie's perspective, since every lender is taking their own approach to this, but let's take the Fannie Freddie perspective. Any of you can chime in on these questions.
Yeah, this is Dean. I'll take a crack at it. So for a purchase, the flexibility that Fannie provided guidelines on the purchase side, Fannie Freddie, is principal residences and second home investments. They did not specifically mention anything about purchases of 2 to 4 unit properties. I suppose a second home investment, I'm not sure how the lending community recognizes that, but I don't think we've seen anything from a 2 to 4 unit property where the purchase allow one of these flexible waivers. Mike, Nick, I don't know if you guys are seeing the same thing, but we have seen a second home investment, but not a 2 to 4 unit property, and that's a good question. I don't think I've come across that scenario yet.
Yeah, I would have to inquire with our team to see. My guess is that would be a no-go situation, but I don't know that for a fact. I would have to ask my team.
So, Dean, I think I would agree with you. I don't think we've seen a 2 to 4 unit owner-occupied property on a purchase yet, but I think Fannie, my belief is that Fannie will probably allow allow a desktop to be performed.
Okay, so we'll just need to check on that.
I see that as an option. I see that as an option on the
Yeah.
Cascade that I have in front of me.
Yeah.
Okay.
But it's still,
But then back to, if the tenants don't want to let the appraiser in, how do you deal with it? We sort of touched on that before, where, it depends on whether you have to have access to the interior of a property or not. And if they won't let you in, they won't let you in, right? If you need to get in, you have to wait.
Right. It becomes a decision by the appraiser as to whether or not they have sufficient information to make a reliable and credible assessment of the condition of the property, and can say so, because Fannie and Freddie do not allow them to make extraordinary assumptions about stuff.
Okay.
And if they can't do that, then they can't complete the appraisal, and then everybody has to wait. And Fannie and Freddie are okay with making people wait. They're just not they're not going to embrace unreasonable risk into their portfolio. And I don't think we can blame them, right? So I just want to add, Audrey, I just want to add one thing at this point for the originators out there, because having sat on that side of the desk myself, I understand the drive and determination and desire to be productive, and the need, frankly. But the one thing I might say to everybody is, and while I generally don't like to prognosticate about rates, we are in an environment that is almost impossible to imagine changing from a rate standpoint for quite some time.
Right, I agree.
There's no potential scenario where the government would allow rates to increase. The truth is, at almost a zero Fed funds rate, no lenders are pricing to the actual market, except for the fact that the mortgage market has kind of seized up in terms of the instability or the lack of placement ability for mortgage-backed securities and collateral debt obligations and some of the other pools that traditionally provide the backstop for lending. So that there are a number of factors that are keeping rates a little higher than they would normally be, is what I'm trying to say.
That's right.
The fact is that we're going to be in a low rate environment for a long time. So if you can survive, and if you can hang on, and if your clients don't need something that calls for HELOCs or a private money or something else, which are still available, at least the private money I'm sure is, the fact is that once we come out of this, and we will come out of it, you'll have an opportunity to make good on all the things that you want to do. Just trust to the process. So
2 really good questions. A, we're being asked whether we can get a copy of the Cascade. Is that something that's in writing that we could distribute, or is it just the interpretation of the guidelines?
So let me answer first, and then I'll let the other guys. We have on our website, if you go to www.access-amc.com, you can type in COVID_directives at access-amc.com. That will take you to all of the impacts and rules, the Fannie Mae rules. You can go to Fannie Mae and find that stuff. You can get all that stuff on our website. It will give you the grid that tells you basically what you can and can't do. Although we've tried to provide that to every one of our lenders, and I know that they're all in overwhelm, and it's tough to get that stuff filtered down to everybody out in the field. But if you can't get it from your lender, then you can get it from our website. And if you just kind of hunt and peck around there, you can get just about as much information as every lender and every appraiser in the business is getting from us. And we try and make communication a cornerstone of what we do. We think you guys need information in order to make good decisions, in order to be able to be confident. And frankly, that's the business that you're in, is providing information, right?
Right. Well, okay. So I think I'm just going to say that from an LO perspective, I bet you they're looking for like a one-page synopsis of this cascade idea. So if it doesn't exist, we'll see if that is something that does exist somewhere and that we can put it together and get it to everyone.
Audrey,
and we're running out of time. Oh, yeah. Go ahead.
Sorry, Audrey, but it does exist. There's a grid that Fannie and Freddie have put together. I can send it to you, and you can send it to everybody on the call. Perfect. If you want.
Let's do that.
Dean and Nick have the same grid. We all operate behind that. So,
great. Okay, and I want to get through some of these questions, and we're going to run out of time, so I'm going to go quickly. So this is a good one. Appraisers are relied on to verify smoke and CO2 detectors and water heater double strapped. Any thoughts on how this will be handled?
This is Dean. I can answer some of that. I'm hearing an echo still, by the way, so I've been muting if I'm not speaking. But basically with some of the HUD rules, if there are things tied to the interior inspection, they're waiving a lot of those things. So actually HUD has a really lengthy FAQ out, and I would advise, and Audrey, I can distribute the link to you, and you can provide it to the rest of the attendees as well. But there's guidance on different things. Like, for example, if it's a manufactured home and there's you need some kind of confirmation of that, you could rely on a photograph from the borrower. The double strap water heater, I don't know if I read that specific issue, but I would think that all the interior related inspection items are going to have to rely on the borrower or the appraiser's conversations with the borrower. Nick, Mike, are you guys seeing kind of the same thing there?
I would echo those exactly. I think that those items are acquired via the interview process with the borrower. And, I imagine some appraisers are asking for the images of those items as well.
And I would agree too.
Here's an interesting one. So here is somebody saying that they've heard that there is a new virtual appraisal pilot program that allows borrowers to use a smartphone for virtual appraisal. Do you guys know anything about that? You can just say no if you want.
Yeah.
So.
No, I want to talk about that for a second because a lot of us are part of the Collateral Risk Network group, and one of the questions that came up from an appraiser was, I was doing a desktop appraisal, but I did a virtual inspection because the borrower walked around her home with a FaceTime type app, and I was able to tell her to direct me in this corner in that room, and so I inspected it virtually. Would that be considered an interior inspection? And some of the people chimed in from the I think it was VA who chimed in, but the GSEs, it sounds like they have a similar stance right now, which is that's a desktop appraisal that relied on a third-party resource, and that third-party resource could be a MLS photo, it could be a real estate agent's virtual video online, it could be a borrower's walkthrough with FaceTime. And I just want to make sure that we distinguish between that, because that's still considered a desktop appraisal. But I haven't heard anything about this pilot. I know that different AMCs out there are looking to do some cool stuff with technology right now.
So I would just add a quick thought. First of all, that the problem with something like that is it's not replicable on a all-encompassing basis. You can't just have one person doing something and then sending videos. The amount of time it takes for an appraiser to wade through that without any structure to it would be overwhelming. What is going to be available here in a matter of days, at least from one source that we're aware of, is an application that can be utilized on an Android or an iPhone. And it will be a way for the homeowner to take pictures of the interior of their house, answer certain questions, send that to an appraiser. that will integrate with their whatever software they happen to use. In other words, it will have structure, there will be standards, it will be consistent. Every one of us as an AMC will be able to QC it because we'll know what to expect. It will be complete and meet the requirements of the GSEs. And that's really the magic bullet that we need, right? So right now there are there are people trying to do this, and there'll probably be more than one solution, I'm sure, but they're right around the corner.
Yeah, and part of that is geocoding the images so that they can verify that they were taken in the spot where the people are saying they were taken. So those are things that are all coming about in the future. They're just not today.
So if all that comes about, we'll do another webinar to cover it in detail. Okay, so we're getting a number of questions about FHA reverse HECM. Are the guidelines the same as before? Is it up to the lender? What are the new standards for HECM appraisals? And then the next part of it is some of my reverse mortgage clients are concerned about letting appraisers in due to being in a high risk group. They're asking if appraisers would consider allowing them to take pictures on their behalf of the interior of the appraisal. So really good questions. And again, quick answers since we're running out of time.
Hey, Audrey, I can chime in on that. I've been dealing with that specific topic here. So with the HECM loans, it is a little bit different because, there's not much of a purchase market there. Everything's sort of more of a refi route. And pretty much it can go the route of an exterior inspection. Now, the way the HUD rules work is for the exterior inspection, it's got to be done on the traditional 1004 full appraisal form. So even though it's an exterior drive-by, you're going to do it on a full appraisal form. And, I think it pretty much covers the majority, if not all, of the refinance loans. And then on the actual purchases, in those rare occasions, it'd be done on the same form, but as a desktop. So a lot more flexibility on the HECM side.
Okay, that's good to know. So again, if you're doing a HECM loan and you have more questions about that, you can contact your AMCs directly, but that's good news. Okay, the comment, my AE at Quicken Loans told me yesterday that they're doing more appraisal waivers for homes that are already Fannie Freddie. Also, they're allowing more drive-bys for most refinances. And that comes straight from the Fannie Freddie guidelines, right? So, or the new guides. Let's see. What's happening with investor loans? That's, they're not being specific about which investor loans, but just any comments on that, guys?
Are they talking about private money? They're not being specific about it, right?
They're not, but just, we know that, we know that private money still exists. We know that you can get an appraisal with private money. To the person who offered me a White Russian, if I mention their company name on the phone call, I'm not doing that. Nice try. But from other investors, like regular outside of Fannie Freddie, does anyone have any input on that?
Well, most of those investors are now sidelined. And part of that is because the investor base, I don't think have a handle on where values are going. I don't think that they have a handle on what's being accepted from appraisals now. There's that kind of state of flux that we're in right now. And I think the same thing that happened back in 2008, where all the investors went away and it took 9 years for anybody to put together a mortgage-backed security again. I don't think we're going to have to wait 9 years because the government's trying to influence and sustain that whole field. But for the time being, everybody's stepping away from that. Wells just did it yesterday, and I don't think Chase will be too far behind, and almost everybody else of any size has stepped out of the market. So it's going to be a difficult and painful time.
Even the ones that have private, investors, and are well funded, a lot of them are still trying to work through the stuff that's in their pipeline, moving away from the tenant occupied type stuff, and they're 30-day all stopped for right now, a lot of them.
Okay, well, let's try to end this on a up note, people. So I'm getting a question about, can we repeat the website again? And we'll send something out to everyone who is registered for the call that has the things that we referenced during the call. We'll get that out to everyone. Is there anything else you guys want to end with that would be valuable for our LOs and other people?
You know, just some positive energy out there. I don't know how many were on the MBS Highway cocktail hour last night. They had Dr. Rosen on there. Barry Habib had invited Dr. Rosen. And on a positive note, and they're looking at this COVID thing. He says among that community, they're hoping and they're have a high level of confidence that this coronavirus will be affected in the same manner that other coronaviruses have been, where somewhere around mid-April, those viruses start dying off. And he said it's not due to heat, it's due to they don't really know what causes it, sun energy, whatever it is, they start dying off. And he says they actually are all hopeful, and there's some expectation that that'll happen through mid-April or towards the end of April. He said there's usually about a 15-day lag after that where people already had it are getting through it, et cetera. So the numbers will still be, moving in a direction. But he said there is a light at the end of the tunnel that they believe.
Yeah,
so,
I think that is for sure. Definitely.
So everybody just hang in there. There's good things on the other side of this, as bad as this is.
There is. And I think that the immediate, shelter in place, et cetera, that's not going to last forever. And they're definitely being proactive on everything else in the industry so that we'll have hopefully a faster recovery. So any last word quickly, Mike or Dean?
This is Dean. Just really the last point for me is just, I kind of echo what Nick's saying, from a positive note, to keep going, we're going to have to adapt, right? And there's going to be changes,
yep.
Whether it's, HVCC or TILA or GFE or, tech changes, compliance changes. This is just all part of that. And that's why everyone's still in business. You guys know how to adapt.
That's right.
This is another step in that direction.
We're all very adaptable, very resilient. We'll get through this. It'll be fine. And if you're a seasoned loan officer, find someone who didn't go through 2008 and give them comfort, because they're not accustomed to this, and it will help them know that we will come out on the other side. Mike, any last word?
So the one thing I would say, and I echo what Dean and Nick has said, but one, maybe the next time we run this webinar, we just make it all about questions and answers for people, right? I think all of us would be happy to do that. Observe and maintain good personal hygiene protocols and stay safe. And, you're a loan officer, so that means you have a high AQ, which is adaptability quotient, just what Dean talked about.
Yep.
And that's kind of what makes you guys all special. So stick around for the miracle, because it's coming.
Yep, it's coming, definitely. So again, we'll see you on Tuesday at 11 o'clock for Rob Crispin and Dave Luna. Also look for the email that we sent out. Barry Habib has offered a special deal for those of us for the next 30 days if you'd like to have access to his program, and just keep posted. And look at our website. There are things on there that you can use. Have a great day, everyone. Thank you, Megan, for all your help, and I hope you will. I will look forward to hearing from you next time. Bye-bye.
Thank you, everyone.